We're jumping straight into Ondas today. Everyone is watching the price action, but the real story is the massive revenue guidance raise and the explosion in their autonomous systems backlog.
Exactly. You're tuned into the Easy Money Show, where we make sense of the market's biggest moves. I'm glad you're with us.
And before we get into what might be the most aggressive growth story of 2026, make sure you hit that subscribe button and smash the like. We're on top of these market movers every day, and trust me, you won't want to miss what's coming next.
So, Ondas, ticker is ONDS. If you've, glanced at a chart in the last 12 months, your jaw is probably on the floor.
Well, without a doubt. I mean, we're talking about a stock that is up something like 500% over the last year. It's hitting 4-year highs.
Yeah.
If you were holding this in early 2025, you're sitting very, very pretty right now.
Yeah.
But here's the thing. Usually when a stock goes vertical like that, I get a little nervous. I start looking for the door.
It's that natural vertigo, right?
Mhm.
You see a straight line up on a chart, and you just assume it has to come back down to earth.
Right. But our job today is to look under the hood, because the story here is that this isn't just some kind of pump. The argument is that the company fundamentally changed while nobody was paying attention.
That is the quote of it. If you knew Ondas, say, 3 or 4 years ago, you probably thought of them as a niche networking company for railroads.
Which is important. Sure, trains need to talk to each other. But, railroad Wi-Fi isn't exactly the sexy tech that sends a stock to the moon.
Exactly. That was the old networks business. But the reason we're even talking about them, the reason for that 500% run, is the pivot. They've effectively become a defense tech powerhouse.
Under that new banner, right?
Right.
Ondas Autonomous Systems,
Yeah.
OAS.
Yep. They aren't just connecting things anymore. They're building the intelligent machines that, protect borders, monitor infrastructure, and intercept threats. It's a whole new ballgame.
And the market is clearly eating it up.
Yeah.
But let's pause for a second. We have to look at the hard numbers that just dropped, because honestly, when I first saw them, I thought it was a typo.
It really does look like a typo, doesn't it? You're talking about the preliminary Q4 numbers.
Right. So they come out and say Q4 2025 revenue is between $27 and $29 million. That beats their own target by 51%.
Mm-hmm.
It's a huge beat.
Huge.
But that's not even the number that got me. It's the guidance for 2026.
180 million figure.
Yes. They're guiding for 170 to 180 million in revenue. And just for context, they're finishing 2025 with around 49 million.
So a quadruple.
They are telling us with a straight face they're going to nearly quadruple in a year. In the hardware business, this isn't software. They have to actually build and ship this stuff. How is that even possible?
That's the question of the year. And if you only look at the revenue line, it sounds like a fantasy. But you have to look one line below that. You have to look at the backlog. A projection is just a wish. The backlog is what makes it real.
Okay, so walk me through the backlog. Is it just interest, or are we talking real signed contracts?
It's contracted work. As of the end of December, the backlog shot up 180% to over $65 million. That is money that's essentially already spoken for.
Okay.
And look at where it's coming from. It's not the old railroad business. It's that OAS segment, the drone segment, which grew 580% year over year in Q3.
So the explosion is all in the new autonomous systems division.
Exactly. And when your backlog is growing that fast, that quadruple revenue jump, it's not about finding new customers anymore. It's just about execution. Can you get the units out the door? The demand is there.
Okay, let's talk about that demand.
Yeah.
Who is buying this stuff, and why them? I mean, there are a million drone companies. You can go to Best Buy right now and get a drone for $1,000.
Uh-huh.
Why is a government paying a premium for Ondas?
And that's exactly what they used to do. 5 years ago, everyone bought DJI drones from China. They were cheap, they were good, but the whole geopolitical landscape has shifted. You have to understand the term blue UAS.
We saw that in the notes. Blue UAS cleared list. Sounds like a bunch of jargon.
It sounds boring, but it is their single biggest competitive advantage, their moat. Blue UAS is just the Department of Defense's stamp of approval. It means every chip, every line of code has been vetted to make sure it's not, phoning home to Beijing.
Ah, so it's tied to the NDAA compliance.
Right. The National Defense Authorization Act. If you're a U.S. government agency or even a critical infrastructure company, you basically cannot buy that Chinese tech anymore. The FCC is locking them out.
So even if the competitor's drone is cheaper, it doesn't matter if you can't legally fly it.
The price is irrelevant. Ondas is one of the very few on that approved list.
So they have a regulatory moat. in a way. The government kind of cleaned out the competition for them.
A huge one. But it's also the technology itself. You mentioned Best Buy drones. Those need a pilot, right? A person with a joystick standing there watching a screen.
Which is crazy expensive if you're trying to patrol, I don't know, 1,000 miles of border.
It's impossible. You can't pay a person to do that, and that's where the drone in a box comes in.
So paint me a picture. What does that actually look like in the field?
Okay, imagine a box, maybe the size of a big air conditioner sitting out in the desert. The lid pops open, their Optimus drone flies out automatically, scans 20 miles of pipeline, maybe it detects an intruder.
All on its own.
Completely on its own.
Right.
Then it flies back, lands itself in the box, and a robotic arm just swaps out the battery. No human ever touches it.
So you're not buying a service, you're buying an automated asset that works 24/7.
That's the game changer. It changes the whole economic model. And once you install those boxes, those docking stations, you're not just going to rip them out next year for a competitor. The switching costs are huge.
It creates that stickiness. And they're not just doing surveillance, right? There's the Iron drone system.
Right, that's the counter-drone tech. It's not enough to just see the border anymore. You have to stop the other guy's drones from crossing it. So they have the eyes with Optimus and Shield with Iron Drone. It's a whole ecosystem.
Okay, so the tech is slick, the moat is real, backlog is booming. But we have to talk about the elephant in the room, the cash.
The war chest.
They raised $1 billion. Pro forma cash is now over $1.5 billion. For a company this size, that is just an insane amount of money.
It is.
Usually with these small cap growth stocks, the biggest fear is, will they run out of cash? Ondas has enough cash to last a decade.
It completely changes the conversation. They're not just playing defense, trying to survive. They have the capital to be a predator. They can buy competitors, acquire technology. We've already seen them do it with companies like Roboteam and Apero.
That's the bull case. That's the good news. But money doesn't just fall out of the sky. Where did that $1.5 billion come from?
It came from selling pieces of the company. To raise that capital, they had to issue a massive, massive amount of new stock.
Which brings us to the bear case. Let's call it the dilution and execution risk. If I owned this stock back in 2024, my slice of the pie just got a lot smaller.
That's the price you pay for the war chest. Exactly.
Yeah.
But it's not just the dilution that already happened. It's the shadow it casts on the future. The filings show a resale registration for millions of shares and warrants.
Okay, explain warrants for someone who might not know. Why does that overhang matter for the stock price today?
A warrant is basically a coupon that lets an investor buy stock at a fixed price later on. So when the stock price shoots up, like it has, those investors can cash in their coupons, buy the stock cheap, and then immediately sell it on the market for a profit.
Which creates a constant source of selling pressure.
It's what we call a supply overhang. Every time the stock tries to rally, this wave of selling can just push it right back down. It's like trying to run uphill with a backpack full of rocks.
A gravity well on the price.
Exactly, until all those shares get absorbed by the market.
And speaking of selling, we did notice some insider activity.
Yeah, this is always a tricky one to read. We saw some directors selling shares recently, about $4.6 million worth. Now look, insiders sell for lots of reasons. Taxes, buying a house.
It's not a mass exodus.
No, not at all. But it's also not buying, is it? When the company is telegraphing this incredible growth, you'd hope to see insiders holding on tight. Seeing a few million head out the door just suggests that maybe they think the current price is a fair place to take some profits. It's not a red flag, but it's a yellow one.
It's definitely data you have to consider. But for me, the biggest risk, the one that would keep me up at night, is the profitability problem. All this revenue growth is great, but are they actually making any money?
The short answer is no, not even close. In fact, they're losing money pretty aggressively.
The margins are just brutal to look at. Net margins cited as low as negative 192%. EBITDA losses over $30 million.
Well, they're spending a ton. Operating expenses doubled in Q3. Now, the bull argument is, of course they are. You have to spend money to make money. They're building the infrastructure for that $180 million in revenue.
And with $1.5 billion in the bank, they can certainly afford to burn cash for a while.
They can, but the market eventually wants to see a path to actually being in the black. And right now, the valuation, it's priced for absolute perfection. They're trading at something like 35 times sales.
Let's just repeat that. 35 times sales. Not earnings, sales.
For comparison, a big defense prime like a Lockheed is closer to 2 or 3 times sales. Ondas is being valued like a top-tier software company, but they sell hardware.
Which means any slip-up, any mistake
Mm.
is going to be punished severely.
Absolutely. The market has already priced in all of the success. If they come in and hit 170 million, great. The stock might just stay where it is. But if they miss, if they come in at 150, or if a big government contract gets delayed,
That multiple could get cut in half overnight.
it could be brutal. And so much of this relies on those big contracts, like the Israel drone hives project. Government work is great, but budgets get frozen, politics gets in the way, things get delayed. It's a real risk.
It's a high wire act. They have the cash safety net, but the valuation wire is very, very thin.
Yeah.
So let's turn to the calendar. What are the key events coming up that people should be watching?
The first one's the most obvious. We need the final report card for Q4.
The official earnings coming in March.
Right. We have the preliminary numbers, that 29 million beat. But I want to see the audited financials. I want to see the cash burn. Is it accelerating? Is it stabilizing? We need to see if that path to profitability is a real path or just, a nice idea.
And with all that cash, we have to keep an eye out for M&A.
For sure. They've told us they want to be consolidators. If they announce a smart strategic acquisition, that could be a huge positive catalyst. But if they overpay or buy something that makes no sense, the market will punish them for wasting that war chest.
And internationally, there's a big one coming up, right? The Singapore Air Show.
Yeah, this is a big deal in the defense world. It's in February or March. Ondas is expected to unveil their comprehensive defense portfolio there.
So why does a trade show matter?
Because that's where the international buyers go shopping. The U.S. market is great, but Europe, the Middle East, Asia, they are all buying this tech like crazy. If Ondas walks away from Singapore with a big new international contract, it proves their moat travels. It turns a U.S. story into a global one.
Okay, and just quickly on the technicals, we mentioned the chart looks strong. Anything specific to watch?
Well, there's talk of a golden cross, which is a classic bullish momentum signal. And this is the big spot, the volatility is extremely high. The stock has a beta of around 1.74.
Meaning?
It means it's almost twice as volatile as the S&P 500.
Sure.
So if the market has a bad day, Ondas could have a really bad day. This is not a stock for the faint of heart. Expect big swing.
Buckle up.
Definitely.
All right, let's wrap this up. We've got the monster growth, the massive war chest, but also the sky-high valuation and the profitability black hole. What's the lowdown here?
The lowdown is this is a high-octane growth story, sitting at the perfect intersection of defense tech and AI automation. They have the cash and the government approvals to win. But that valuation is steep. You are paying today for growth that has to happen tomorrow. They have to prove they can actually scale this thing without tripping over their own feet.
So it's not a set-it-and-forget-it stock. This is one you have to actively watch.
Absolutely.
So here's the question we want to leave you with today. With that $1.5 billion war chest and a stock price up 500%, is Ondas building a sustainable defense prime, maybe the next great innovator in the drone age? Or is this a cash-burning firework that's going to shine incredibly bright and then fizzle out once the hype settles?
That is the $1.5 billion question, isn't it?
Let us know what you think down in the comments. We read every one of them.
And remember, in a market moving this fast, information is your most valuable asset.
Stay curious, stay simplified, and we'll catch you on the next one. This is the Easy Money Show signing off.